Hello everyone. Welcome to the channel. Today we will understand an important concept in trade finance called bill discounting. Bill discounting is a short-term financing facility provided by banks or financial institutions. When a business sells goods on credit, the payment may come after 60, 90, or even 120 days. Instead of waiting for the due date, the seller can approach the bank and receive immediate cash by discounting the invoice or bill of exchange. Typically, the bank pays around 80 to 90% of the invoice value upfront after deducting interest or discount charges. This helps businesses maintain smooth working capital and uninterrupted operations. Bill discounting under delivery against acceptance, DA or D/A, is a short term trade finance facility in which a seller, exporter, or supplier obtains immediate funds from a financial institution by discounting an invoice. Meanwhile, the buyer is allowed a predetermined credit period, typically 30 to 120 days. First, the seller supplies goods or services to a buyer on credit and issues an invoice or bill of exchange, for example, with a 90-day credit period. Second, the seller approaches the bank and submits the invoice for discounting. Third, the bank verifies the documents and pays an upfront amount to the seller after deducting discount charges or interest. Finally, on the maturity date, the bank collects the full payment from the buyer. This way, the seller receives money immediately while the bank waits until the due date to recover the amount. Bill discounting offers several important advantages for businesses. First, it provides immediate liquidity by converting receivables into cash. Second, it improves working capital management, allowing businesses to pay suppliers, salaries, and other expenses on time. Third, it is often faster and simpler compared to traditional loans, since financing is based on invoices. Fourth, it is particularly useful for small and medium enterprises and exporters, who often face longer credit periods. And finally, the cost of bill discounting can sometimes be lower than other borrowing options, depending on the credit profile. There are mainly two types of bill discounting. In recourse bill discounting, if the buyer fails to pay, the bank can recover the amount from the seller. In non recourse bill discounting, the bank takes the risk of buyer default. Another important form is LC bill discounting, commonly used in international trade. In this case, the exporter ships goods under a letter of credit issued by the buyer's bank. After submitting shipping documents, the exporter's bank discounts the bill and provides immediate funds. Later, the bank collects the payment from the importer's bank on the maturity date. Because it is backed by a letter of credit, LC bill discounting is considered relatively secure in international trade. Hope session was informative. Thanks for watching.